Hi everyone, thank you for joining this webinar on modernizing statutory reporting. I'm Srini Raju, Solutions Architect at Oracle Financial Services Global Business Unit. The topic of the discussion today is a data-driven approach to modernize the statutory reporting function. We'll specifically focus on challenges and the accelerators the solution provides when it comes to detailed granular data required for notes to accounts for statutory reporting. So let's get started. Let me set some context here. Stakeholders are demanding more transparency. We see an increased trend in integrated reporting. Now, what this asks for is not just financial information, but also non-financial information. There's increased focus on narratives in your financial reporting. Narratives to better articulate your customers' profiles, your market or product profiles, and even your organization strategy. More than ever before, there is an increased need for stakeholder confidence. To divulge more detailed notes to account information across your liquidity profiles, the geographical location of risk of your customers, or for the fact industry classification, or your customers moving from a high risk in stage 2 to stage 3 accounts. Oracle Enterprise Performance Management suite of applications is today live in a number of financial institutions across the globe for your external stakeholder reporting. Now, this provides a robust, process-driven platform to define, author, review, and publish your financial management reports for your external stakeholders. It provides best-of-the-breed capabilities to combine financial data with narratives. It provides a collaborative platform for your teams to different departments to come together to work towards your external stakeholder reporting more securely and also report these numbers more confidently to your external stakeholders. It also provides robust supplementary data management capabilities for your detailed notes to accounts for your statutory reporting. Now, this supplementary data management asks for a reliable upstream source of truth across your customers. And as we speak to our prospects and in the industry, we've seen significant challenges when it comes to this upstream source of information for supplementary data in statutory reporting. And that exactly is the focus of this webinar today. Let me set some context. As we speak to the finance organization and their modernization needs, the finance function is moving towards optimizing their chart of account design and moving towards a thin set of chart of account. Now, here's an example, right, where you would like to limit your number of segments in your GL, primarily having the minimum number of segments so that you can optimize a thin GL. Now, this will enable you to have more control and more agility in terms and promoting a much more better, faster financial close. Well, this does support all your finance reporting needs. But where this falls short is to support your detailed management reporting or for the fact when it comes to detailed notes to accounts for your statutory reporting. Now, when we look at the thick GL design, where banks would like to hold additional dimensionality with respect when it comes to supporting references, like for example, distribution channel, product type, or when it comes to specific, your treasury department needs, like you would like to have more granular details, including trade level details to get to your department level P&L. Of course, this very well supports your management operational needs with more segment details. However, this falls short in terms of dimensionality to support detailed notes to accounts for your statutory reporting. Now, customers are wary to bring in more dimensionality here, largely because of volume and performance bottlenecks. Now, the only way to look at is to look for additional analytical dimensions that are required for detailed notes to accounts. Now, these are the typical information which you need to improve your stakeholder confidence. Like, for example, divulging your notes to accounts on your industry classification, related parties, or in fact, even maturity profiles. To also share to your stakeholders, information across your guarantees, geographical information, or even, stage classification of your accounts and their migration from high risk stage 2 to stage 3. Now, the challenge we've seen is a lack of single source within the organization to provide this for your downstream statutory reporting, largely because these are distributed data sets, or even for the fact that when you look at, based on the maturity of the organization, when we look at their enterprise data warehouse, even the operational data stores, which really lack the details. And again, when you start sourcing this information from a number of source systems, reconciliation becomes a huge challenge, which requires number of additional reconciliation steps. So the bottom line here is it clearly lacks automation and extremely time consuming when it comes to preparing the statutory reports. I'm sure you would acknowledge a number of these challenges when it comes to supplementary data for statutory reporting. There are significant challenges in terms of data sourcing. A lot of this are largely manual with spreadsheets, and of course this poses increased end user computing risk because this data needs to be reliable, as this data needs to go to the external stakeholders. And more often than not, there are more than 4 departments who are involved in preparing these reports, which lack a single source of truth. Now, data granularity and reconciliation becomes a huge challenge when it comes to supplementary data. The bottom line, what we've seen is, of course, on one hand, there is lack of automation because of lack of upstream single source of truth for supplementary data. And of course, it becomes extremely time intensive in preparing your statutory reports. So we at Oracle have designed a modern finance solution ground up, starting with data. A good way to visualize this is the pyramid which you see here. The bottom of the pyramid is the data layer, a pre-built, curated data model for finance. Now, this data model can hold granular information such as instrument level information. Further, it can hold granular information such as business events like transactions, an ability to prepare these data for downstream finance and accounting, an ability to aggregate this information and provision this information for downstream accounting hub. The accounting hub plays a role of a single rules repository where the accounting rules are applied once for all the source transactions. And this creates the necessary debits and credits with respect to the chart of accounts and additional supporting references. These debits and credits are further provisioned to the downstream general ledger to create the required general ledger balances and the trial balance. And the trial balance is further provisioned to downstream enterprise performance management suite for group consolidation and reporting. Now, this design takes care of both the needs in terms of both a finance modernization and reporting needs. Now, what this means is it clearly supports a finance modernization need of a thin chart of accounts for a faster financial close, and also a thick GL design for detailed management reporting and financial reporting. Now, what this also ensures is a complete data lineage from top of the house GL balances all the way back to the granular transaction level details. Now, this data layer is pre-integrated with ERP, which means it provides increased confidence in terms of data, plus it mitigates all the risks and reduces audit costs with complete transparency and traceability. Now, to envisage the modern finance solution, what you see here is the Oracle's reference architecture, a simplified view of bringing risk and finance information together. Now, this Oracle reference architecture today is live in a number of financial institutions across the globe. The key part of this architecture is the data layer, which you see here, which is a pre-built curated data model for finance. And this data layer is pre-integrated with downstream ERP. Now, let me walk you through this picture. On the left, you see your existing data lakes, data warehouses. It could also be a number of your source systems, an ability to accelerate your data lake efforts for finance with a pre-built curated data model with our data foundation, an ability to hold granular information like transactional information for the purposes of accounting, an ability to standardize this data, cleanse this data, aggregate this data and provision this data for downstream ERP. The accounting hub can read this aggregated transactions with the necessary chart of accounts and the additional subledger dimensions, can apply the accounting rules once and create the credits and debits. This further credits and debits are further provisioned to the downstream Oracle General Ledger for posting the balances and also creating the trial balance. The trial balance is further provisioned to the consolidation layer for group consolidation and group reporting. Now, a key part of this reference architecture is an ability to bring back these balances back to the data layer. There are another set of book of records, which is the customer book of records, which today resides in the source system. An ability to bring these book of records at a very granular account level details and reconcile this with the finance balances. In turn, reconcile this and create a single source of truth within the data foundation layer. Now, this information is now available for downstream applications to consume, whether it's risk, whether it's performance, or even treasury applications. These processed outputs are unified in a results area. Now, this unified results area now not only supports detailed notes to accounts for statutory reporting, and now the same result set can support further regulatory use cases and also management reporting. Now, the key takeaway is clearly this is a strategic architecture. Although the view you see here is for one use case for detailed notes to accounts for statutory reporting, but however, it can support from a same strategic architecture an account fiscal view, a managerial view, or even for the fact risk, treasury, and a regulatory view. Now, let me give you a customer example. Now, this customer had listed a set of dimensions which were required for their statutory reporting. There were close to 30 plus dimensions which were required, fairly detailed for their statutory reporting purposes. Now, as we do the assessment, there is only a limited set of dimensionality which are covered within the ERP, when it comes to whether it's thin GL, like dimensionality around business unit to cost center to legal entity, or for the fact when we take into account a more detailed set of subledger dimensions for the fact which included client category, distribution channel, and so on and so forth. Now, the data foundation here could very well comprehensively cover all the statutory reporting requirements, be it holding dimensionality across geographical location of risk, line of business, or including account level information across risk ratings, maturity profiles, and also for the fact specific dimensionality around capital assets, and so on and so forth. So in this way, the data foundation could very well comprehensively cover a lot more dimensionality and the needs required for statutory reporting. Well, I started this webinar talking about specific challenges we've seen in the industry when it comes to an upstream reliable source required for detailed statutory reporting. Now, as we see in the organizations, that typically the consolidation and close happens at a higher level of grain, which means at a level of general ledger balances. Right? But when it comes to statutory reporting, a lot more detail is required, especially across different different accounts and a lot more. So in that sense, Oracle Data Foundation acted as a pre-built curated data model with a lot more dimensionality, with granular information across transactional information to account level information, plus a complete reconciled set of data with GL balances and close to 165 subject areas covering across risk, performance, treasury, and compliance, supported with data foundation. So which means the data foundation could be leveraged for account level, asset liability to interest rate risk parameters, to liquidity risk parameters, to even account level, stage level, stage determination to account level RWA. In this way, we were able to very well support all the details required for the notes to accounts for statutory reporting for this customer in terms of extended dimensionality on top of what the additional dimensions which were there in their thin chart of accounts, plus a number of notes to accounts across interest rate risk profiles to liquidity risk profiles, and also specific notes to accounts around derivative disclosures, and also troubled debt restructuring as few examples. Of course, a lot more details in terms of related parties and a lot classification across their existing products, loans, and leases, and so on. So, in summary, Oracle Data Foundation can streamline your statutory reporting process. Of course, it provides a number of benefits, starting with a pre-built curated data model for finance, with pre-built out-of-the-box integration with ERP and finance flows, and a single point of reconciled design so that you could rely on trusted data for your supplementary data reporting, plus reduce cost and faster time to prepare your statutory reports, and more importantly, freeing up your analyst time working with lower order activities such as data preparation, data standardization, and freeing up time, your analyst time for more higher order activities such as review and analysis. Well, I hope you enjoyed this session. If you need more details, we are more than happy to engage with you. Please reach out to me at this below email address. Thank you very much for your time today.